Good morning, everyone, and a very warm welcome to today's webinar, Building Financial Resilience Against Climate Disasters in the ASEAN Region, jointly organized by the Climate Change in Southeast Asia program at ISEAS Yusof Ishak Institute and the Global Asia Insurance Partnership. I'm Jiahui, your MC for today. Before we begin, I would like to go over a few housekeeping matters. Firstly, please note that this webinar is not under the Chatham House rule, and the recording will be uploaded on YouTube after the event. Next, if you encounter any technical issues, please use the chat function to reach out to our technical support team. To ask questions to the speakers, please use the Q&A function, stating your name and affiliation together with your question, as well as which speaker you would like to pose your question to. You can send in your question at any time. Lastly, if you would like to stay informed on our future activities, do sign up for updates at the links which I have shared in the chat box. Without further ado, I would like to introduce our moderator for the session. Dr. Christopher Len is Visiting Senior Fellow and Co-Coordinator at the Climate Change in Southeast Asia program here at ISEAS. I will now invite him to begin the webinar. Dr. Len, please.
Good morning, everyone, and welcome to today's webinar titled Building Financial Resilience Against Climate Disasters in the ASEAN Region. My name is Christopher Len. I'm a Visiting Senior Fellow and Co-Coordinator of the Climate Change in Southeast Asia program at the ISEAS Yusof Ishak Institute. This event is jointly organized by our program and the Global Asia Insurance Partnership. Today, we'll explore how ASEAN can strengthen financial resilience against climate disasters in the ASEAN region. We are privileged to have three distinguished speakers, each addressing critical dimensions of this challenge. Each will speak for 15 minutes, including a brief introduction of their organization. Our first speaker is Dr. Olivia Jansen. She is Deputy Director and Lead Scientist for Environment and Climate at the Lloyd's Register Foundation Institute for the Public Understanding of Risk. The institute is part of the National University of Singapore. She will be presenting on the topic of public understanding of climate risk in ASEAN. Next, we will then have Ms. Ellen Yong, who is Chief Operating and Financial Officer at the Southeast Asia Disaster Risk Insurance Facility. She will present on the topic of regional risk finance solutions. Our third and final speaker is Mr. Craig Thorburn. He is consultant at Global Asia Insurance Partnership. He will be sharing insights on the subject of protection gaps and how to address these gaps. So let's begin with Dr. Olivia Jansen. Olivia, you have the floor.
Thank you, Christopher, and good morning, everyone. Thank you, Christopher, especially for saying my institute's very long name. So from now on, I'll just call it IPUR. IPUR, as Christopher said, is a research institute at the National University of Singapore. Let me start sharing my slides, and I'll tell you a little bit more about it. I hope that's visible to everybody. IPUR is, we're very much a research institute. We do research. What drives us is to understand how individuals perceive risks, how they understand risks, and what the underlying factors are that might be shaping those perceptions of risks, and then motivating them to take protective actions. So we're interested also in what can be done to shape or influence those perceptions and guide people towards taking informed decisions and taking appropriate protective actions. So we're very much involved in research and our main outputs are scholarly articles and so on. But we are also very concerned and keen that the insight that we derive from that research gets out to the people who need it, to risk communicators and to people who are taking decisions in the face of uncertainty. And so we spend quite a bit of our time on producing sort of public-facing reports, holding events, and so on. And it's very nice to be able to today have the opportunity to talk to you a little bit about some of our work. There's plenty more information available on the website, and this slide just gives you a little taster of the different kinds of things that we work on, with specific reference to my areas of focus, which are natural hazards and the disasters that they generate, climate change, both in terms of mitigation and adaptation. Let me tell you straight away what I'm going to say. That way, whatever happens in the rest of the presentation, at least I've got the main messages across. So first of all, people in ASEAN are less worried about climate change risk than people in other regions, but they're better prepared for extreme weather events. Second, people consider flooding to be an important risk, but it's not the top priority risk for most people. Third, people can and do act to protect themselves, and I'm thinking here, focusing here mainly on flooding, especially when they're acting alongside others in their community. So we see strong social effects on whether people take individual action. And finally, drawing on evidence from some very recent data from Singapore, we find that people are willing to pay for investment in flood risk management, so by government, especially when they think it's going to be effective, and also when it avoids negative impacts on biodiversity. So we see a concern also and a willingness to pay to lessen the negative ecological impacts of flood protection. Let's look at these one by one. First of all, I'm going to give you a few snapshots of data from the World Risk Poll. It's a huge global poll involving about 1,000 people in each of more than 140 countries. We've got 140,000 respondents for this, and that allows us to say, to make some, to get a good feel for what people around the world perceive. And this particular question, for which the data is on the screen right now, is: do you think that climate change is a threat to people in your country in the next 20 years? So we're getting people to think at the national level, and we're getting them to think in terms of the medium term. And you'll see that Southeast Asia is right down at the bottom. The regions here are ordered in terms of people who consider very serious and somewhat serious together. And you can see that Southeast Asia and the Middle East are right there at the bottom, with 63% of people considering climate change risk to be either very serious or somewhat serious. So that big contrast, let's say, with Southern Europe, where that figure is up at 87%. But people are worried about severe weather. So clearly people are distinguishing here between sort of climate change, some kind of a global phenomenon, and the risks to themselves as individuals and to their families from severe weather. And you can see that here Southeast Asia is towards the top, with 75% of people either very or somewhat worried about severe weather. They ought to be, right? Because Southeast Asia is particularly prone to disasters driven by natural hazards. And one of the questions here one of the questions in the poll asks about experience, whether you personally have experienced a disaster in the past 5 years. And you can see extremely high levels of responses, positive responses in the Philippines. So the Philippines really one of the most disaster prone, both in terms of exposure and vulnerability in the whole world. So what about people's level of preparedness? Are people, they're aware of disasters, they experience them, are they doing anything about them? And we've got a question which allows us to get some insight into that, which is: does your household have a plan for a future disaster? And here you can see that the ASEAN average is really very, very far above the global average, almost like 25 percentage points above the global average in terms of preparedness. So that looks great. But just one sort of moment of caution, perhaps, is that we've got 83% of people in the Philippines saying that they've got a plan for a future disaster. And that sounds, at the global comparative level, excellent. But remember from the previous slide that 86% of people in Singapore have actually already experienced a disaster. So in those terms, it seems perhaps surprisingly low. Or we might want to think, who are these 17% of people who still don't have a plan, despite the very high level of disaster frequency and severity in their country? Moving quickly on to some research that we've done specifically in the region in 4 countries. So we did a survey, a much more detailed survey of flood risk perceptions and actions in Singapore, Japan, Vietnam, and the Philippines. These are broadly representative samples, and we collected the data online during 23, and we asked people about what they thought of flood risks, what they were doing themselves, and what they thought about policies in relation to flood risks. We wanted to make sure in the survey that we had some people who had experienced floods. It turned out that it was much more difficult to find people who hadn't experienced floods. So in Vietnam and the Philippines, just 2.5% of our sample hadn't personally experienced floods in their own city or town. We also wanted to get a spread of different levels of trust in government, because we suspected that that was one of the things that would be driving people's individual action and also their support for policy. And so you can see on the right-hand side of this slide, the different levels of trust that people have in government, specifically to protect people from floods. And we're in Singapore, maybe interesting to bring your attention specifically to the figures for Singapore, for some very high levels of trust. We've got 3/4 of people who agree a lot, strongly agree that they trust the government to protect them from floods. And then we ask people, how much of a risk is flooding to you? And you can see that these figures are pretty high, once more. Even in Japan, which is the lowest, we've got 26% of people saying that it's on the high end of the scale. That rises up to 60% in Vietnam. So we've got 6 out of 10 people saying flooding is a high risk. But what happens when we ask people to put this into the context of the whole urban risk landscape that they face? And then things look a bit different. So we ask people to rank these 10 different sort of urban risks, including some which are natural hazard related, but also others which are not, like traffic accidents, infectious disease, and food contamination. And you can see there that while in Vietnam, flooding was the #1 risk, it was number 9 in Singapore. So people are concerned, but if you ask them to prioritize the risks, they would be putting it right towards the bottom of this list. We ask people about risk to you, and then we ask people about risk to others. And you can see that the patterns are very similar. And flooding in particular rises up a little bit. So it comes to number 2 in the Philippines, number 5 in Japan, but it's still right down there at number 9 for Singapore in terms of comparative risk concern. What about actions? First, let's think about individual actions. What are people actually doing? And we ask people a long list of the sorts of things that they might do themselves as a household to protect themselves from floods. Some of these are clustered around things they could invest in, so household improvements. Some are more behavioral change. We also ask people about a much more radical, dramatic kind of step that they might take, which would be to relocate to a different area. And we also ask them about taking out insurance. So let's have a look at what people said they were already doing. This is current individual action. And I've just highlighted the figures there for insurance. 29% of people in Japan said that they had taken out insurance against floods, rising up to 45% in Vietnam. I'd be interested to hear from those of you who know much more about the insurance industry, whether you find those responses plausible or whether people may be misunderstanding, in fact, the nature of the insurance coverage that they already have. Then we wanted to investigate a little bit what's driving individual action. So we asked, we did a regression analysis in order to see whether demographic factors or other attitudinal factors were associated with people's tendency to take individual actions. And the thing that came out really strongly here was a question that we had about whether people had been involved in any activities in their community relating to flooding and environment issues. And this was the one that really came out as being significant and having a large effect size. So often we focus on trying to communicate to people about the hazard itself. Risk perception didn't, in our results, drive people's action at all. It wasn't significant. Social norms were a bit significant. And then final thing to point out was that trust in government to protect people from floods had slightly different effects in different countries. In Vietnam and the Philippines, people were a bit more likely to take individual action if they had more trust in government. In Singapore, it was the other way around. So we saw a substitution effect, that if people trusted government to take action, they were less likely to take action themselves. We also asked people about their support for policies. And when you ask people straight like this, they say they support everything. And I put up the results here for Singapore. I don't know whether it would come as a surprise to you to find out that making flood insurance compulsory for all properties in high flood risk areas was something that's strongly supported by the majority of the public. And reclaiming additional land off the coast, which is the key intervention that the government will make, was on balance, still supported by a majority, but a little bit less supported than most of the other policies that we asked people about. I just put up the Philippines too as a point of comparison. Our options here, the answers that people could give were slightly different, and they included relocating communities out of high flood risk areas, compensating people who have experienced floods. And you can see that once again, everybody supports everything on average. And if we look just at the least popular policy, again, bearing in mind that still a majority supports it, it's reclaiming additional land off the coast. And again, those of you who know the context, let's say, of Manila and Manila Bay, that's one of the key government interventions in order to deal with flood risk. So when people say they support every policy, what about if we ask them if they're willing to pay for it? And so we went into a bit more detail, specifically in the Singapore context, and asked people about their attitudes towards Long Island, which is the government's plan to reclaim a large piece of land off East Coast Park, probably structured as a series of islands, which would increase land availability. There'd be new sort of parks planned for this. There'd be a new reservoir, but of course its key function is coastal protection and flood resilience. And we asked people using a choice experiment or willingness to pay type study, whether they would be, how much they would be willing to pay for this. 1,000 respondents. This is very new data we collected, just finished collecting it last month. And we asked people some standard stuff about risk perceptions and control variables, sociodemographic variables, and so on. And we found that people are willing to pay. In our sample, the average amount that people were willing to pay for for the Long Island project, if it were to offer high flood protection, was just over $26 a month. If it only offered a lower level of medium level of flood protection, so it reduced it, but it didn't fully, in the way we characterized it, fully reduce the probability of flood events, people were willing to pay $18. Take a quick look at the habitat loss line as well. So people were concerned about habitat loss, and they were saying that they were willing to pay, say, $13 a month in order to have a coastal protection project which avoided habitat loss. So for us, that was quite striking. We suspected that it would be the case that people would be concerned about ecological effects, but that's quite a striking figure. I'm going to stop there and return the floor to Christopher and the other panelists, but I would be delighted to get your feedback and to answer any questions. Thank you very much.
Thank you very much, Olivia, for the very interesting presentation. I'd just like to add that at ISEAS, under our program, we also published this flagship survey called the Southeast Asia Climate Outlook. The last one was released in September 2024. That's the 5th edition. And in that survey, we also covered issues concerning climate change, food security, and energy transition, with a very specific focus on the general population in Southeast Asia. So I would encourage the audience to look at that. Our findings are generally similar to yours. Like you said, there's a growing concern about climate change. That's reflected in our survey as well. I don't want to take up too much time. I would only say that it would be interesting to compare your findings with ours at some point in time. So now we move on to the next speaker. We have Miss Ellen Yong. Please, can you take us through your organization's innovative approaches to regional risk finance? Over to you. Thank you very much.
Hi, thanks, Dr. Len, for the introduction, and thanks, Dr. Jen, for the very insightful presentation. A lot of data and new information to dive into. Please let me share my screen first. Okay. Are you able to see the opening slide for the CEDRIF presentation?
Yes, we can. Please go ahead.
Okay, thank you. Thank you everybody for joining me today for the webinar. Please allow me to introduce the Southeast Asia Disaster Risk Insurance Facility, short form for CEDRIF, and discuss the opportunity and challenges for scaling up risk finance in the region. So the topics for today, we'll be covering who we are, what we do, and then we'll move on to talk about the regional cooperation in insurance, talking through the challenges, benefits, successes, and opportunities. So first off, who CEDRIF is. CEDRIF is a regional initiative established to provide ASEAN countries with insurance and technical solutions to strengthen financial resilience against disaster and climate shocks. And our current members include Cambodia, Indonesia, Japan, Laos, PDR, Myanmar, Philippines, Singapore, and Vietnam. Although the membership is open to all ASEAN plus 3 countries. So the mission of CEDRIF is to take the crisis out of disaster by developing and implementing financial solutions that arranges funds before the disaster strikes. So through the use of instruments such as insurance policy. And CEDRIF is owned and overseen by its members countries through a trust in Singapore and is incorporated and regulated as a licensed insurance company. We effectively operate as a de facto not-for-profit mutual, so owned by the governments of the member country, and we return any profits to member countries and operate with donor-supported capital and operating costs. So more into what CEDRIF do. CEDRIF offers a range of financial products and services. That is our core mandate. But while our core mandate is to operate as a risk carrier in offering insurance services, we also assist members through transaction advisory, establishing risk finance programs, and investing in analytics and technology. And we can support our members through various ways, as a center of expertise, transaction advisor, direct insurer to governments for either indemnity or parametric products, and as a reinsurer to existing public insurers in member countries. And by aggregating and pooling risk across the region, we can transfer risk to international commercial markets more efficiently. So now let's talk about the challenges of regional cooperation. And first, there is a wide diversity in country context across ASEAN. So each country faces very different perils, have a different geographical landscape, and faces different natural perils and varying availability of insurance products. And some countries are more prone to floods, while others face frequent droughts or typhoons. This diversity makes it challenging to design a one-size-fits-all insurance solution. And second, countries are at different stages of developing their public insurance programs. Some countries have well-established systems, while others are just beginning to explore these solutions. This disparity can hinder the implementation of a regional insurance strategy. And third, the levels of domestic market development vary significantly. Some countries, such as Philippines, have mature insurance markets with high penetration rates, while others have limited market development. And this really affects the ability to introduce and scale new insurance products across the region. In addition, engaging international markets also presents complexity. Each country has its own regulatory environment and procurement processes, which can be difficult to navigate. Building trust and effective coordination among countries and with international partners can sometimes be challenging. And finally, political difficulties can arise when coordinating and implementing joint programs. Aligning policies and priorities across multiple countries requires significant efforts and can be hindered by different interests. But despite these challenges, there are common gaps and needs across the region. First, expanding coverage cost effectively is a significant need. By pooling resources and risk, we can achieve economies of scale, reducing the cost per unit of insurance coverage and securing better terms with commercial insurers. Second, reducing transaction costs and streamlining access to international markets is essential. Standardized processes can simplify the implementation of new programs and make it easier to bring to international markets. Access to data, models, and specialized insurance expertise is another critical need. Sharing data and technical knowledge among member countries improves risk modeling and pricing accuracy, enhancing the overall quality of insurance products. And cost-efficient reinsurance capacity is another area where regional collaboration can make a significant impact. Because by pooling reinsurance needs, countries can lower premiums through higher negotiation powers. And lastly, premium affordability and cost sharing between insured parties and public support are crucial. Effective cost-sharing mechanisms and subsidies can make insurance more affordable for vulnerable populations, promoting financial inclusion and resilience. And now let's look at the specific benefits of regional collaboration in disaster risk financing and insurance. So more efficient insurance coverage through a regional pool, we can achieve risk diversification, economies of scale, and better negotiation power, ultimately reducing cost. And simplified go-to-market processes. Regional collaboration reduces transaction costs and simplifies the processes for governments to introduce new insurance products, saving time and money. And centralized technical expertise. Providing centralized technical expertise in placement and in market negotiations improve the quality of insurance products and conditions. And next, regional collaboration can also support difficult to insure assets, increasing overall protection. And then you have a joint access to technology and innovation, such as collaborating on testing and implementing new technologies and products, foster innovation and improve insurance solution. And finally, regional collaboration helps smooth insurance prices over cycles, increasing budget and price stability for member countries. And by addressing these common gaps and leveraging the benefits of regional collaboration, we can build a more resilient and financially secure environment for all ASEAN member countries. So let's look at these graphical representation of the financial case for strengthening resilience through diversification. In blue, imagine this as the total premium cost paid by summing all individual countries. In orange, see how a regional risk pool like SeaDrift can reduce the cost of protection. While the underlying risk remains the same, a risk pool can lower the cost of information and operating costs through shared investment, replicating successful products and economies of scale. And most importantly, by pooling risk and taking advantage of the natural diversity across the region, the pool reduces the combined volatility of the group. And since not every country in the pool will experience extreme drought or flood in any given year, a pool can manage collective disaster risk with fewer funds and capital than if each country prepared for its own worst-case scenario individually. I also want to highlight this study done on public asset insurance, which look at the potential savings on premium if countries in the region is to join together to form the regional pool. Actually, this was, I guess, one of the feasibility study to see the impact of forming the regional pool, which became SEADRIFT in the end. So what it finds is that one potential structure for joint protection against earthquake could see premium around 60% lower than if country purchase cover individually, based just on diversification alone. So this is without additional savings from other investment in analytics, like we mentioned. And a larger, better diversified portfolio and joint approach to market could achieve even larger savings with overall price reduction up to 25% estimated. So now I want to talk a bit more on the regional risk pool in the world and in Asia. The first multi-country risk pool in the world was formed some maybe 18 years ago in 2007 in the Caribbean as CRIF. It now serves the Caribbean and Central America. In the last decade, PIC-RIC, which serves countries in the Pacific, and ARC, African Risk Capacity, which serves Africa, were also formed. And SEADRIFT Insurance Company, formed in 2019, is the youngest of the 4 risk pools and was established to serve the ASEAN +3 country. And as our first product, the company launched a hybrid parametric flood risk policy for Laos, PDR, in 2021. And in 2023, the Lao government submitted its first claim against the policy. And SEADRIFT is pleased to be able to pay out the claim just 1 business day after the Ministry of Finance submitted the notice of loss and to support the government in its recovery efforts against the insured flood events. And again, last year in 2024, the company paid out $3 million for the event Typhoon Yagi. Next, I want to discuss the opportunities for joint insurance activity and bring together what was discussed so far. So SEADRIFT was set up as an ASEAN +3 regional institution to support members' countries in strengthening their financial resilience to climate risk and natural disaster. This can provide a long-term institutional home for ASEAN-wide effort in scaling up of disaster risk finance. As a regional institution, SEADRIFT can support the design and implementation of insurance policies and technical programs by being a regional hub for knowledge and experience. SEADRIFT can also serve as a regional platform for data, tools, and technical services, providing joint technical services to countries, supporting risk assessment and analytics, and facilitating access to innovative technology solutions. And finally, through joint financial solutions, countries can enhance national programs, benefit from regional aggregation and diversification, and achieve more efficient use of capital and realize premium savings. And I think that's all I have for you. Thank you for your attention. Back to you, Dr. Len.
Yes. Thank you, Ellen, for laying out the case for regional collaboration from an insurance point of view. That was very useful. And now I turn to Mr. Craig Thorburn. Craig, we look forward to your insights on protection gaps. The floor is yours.
Very good. Let me share my slides. Hopefully they work very well for you. So I'm going to talk to you today a little bit about the work we're doing at the GAIP, and in particular, what we've learned so far in terms of our approach to protection gaps, what protection gaps are, and the progress being made across the region, and our proposals that we're making about addressing them. So first of all, the GAIP, just a quick introduction. It's a tripartite partnership, which is a little unusual rather than a public-private partnership. It involves both the public sector, the private sector, and also the academic partners, which is really useful because we can bring both the research stage, the regulatory policymakers, and the industry together in addressing this problem. So it's a little unusual in that sense. It's been going for only about 4 years now and just really getting going. And particularly we're focusing on three main pillars. The pillar I'm talking to you today about is mostly the policy think tank pillar, where we're looking at how we can help governments and government actors to make progress on this important challenge. So what are protection gaps? Normally you see a lot of discussion about protection gaps without a lot of people really being clear about what they mean. But the normal definition is the difference between the total economic loss from a disaster and what has been insured. But that can arise in two parts, the loss. It can be the insurable gap, what insurance companies could insure, as against what's not insured. And we see that a lot with natural catastrophes where there's concern about whether insurance companies can actually insure major events for some reason or another. We say that the uninsurable part should be focused on what is not insurable for technical reasons, but there can sometimes be something that's not insurable because there simply isn't the capacity in the insurance industry to do so. So if it was able to have greater capacity, it could provide that insurance. So that then leaves a gap which is insurable, but insurance companies are not reaching those people. And I think the first presentation today has been really helpful in giving us some insights into some of the reasons why people may not be taking out that insurance from their side. There's also a whole lot of reasons why insurance companies may not be providing it. But all of that's very useful in terms of insurance sector talking to each other. It's important to also see why this is important for government. And so therefore we turn that exposure from what is not insured into what is the government's responsibility, the fiscal exposure. And originally there was a lot of discussion about the need for disaster recovery and reconstruction. So governments would need to respond in the short term, rebuilds, infrastructure, things like that. But more recently, we've seen that transition more to in terms of the need for social support. We saw a tremendous amount of social support provided during the COVID case, for example, where governments intervened a lot, not so much for reconstruction as so much for social support. And then we come to our solutions, and these are kind of like the logical way of thinking about it. The first thing you can do if you've got a risk problem is to reduce that risk. And a lot of what can be done, and again mentioned in the first presentation, was what if we were to, build levy banks and things like that to avoid the problem, make the risks smaller. The second option is to increase our insurance penetration to actually provide more insurance to people. And that's obviously another important option. And the third option is risk financing, and in particular, there are solutions for the government to be able to manage its own risk. And there, the presentation from Seadrift was really important because a lot of their solutions fall into this category. And we find that many of those can be public-private partnership solutions. So let's look at where we're making progress. These three charts very quickly talk about how the protection gap is progressing in Asia, and you can see it's getting bigger rather than smaller. So we're not really making the progress we should. In terms of emerging Asia, the measurement has made some significant changes in the 2021-2022 period, so we've made some big jumps. But even in advanced Asia Pacific, the risks are getting bigger, and the progress we're making towards addressing those with those three solutions is not really going fast enough. In fact, in the last 10 years, from 2013 to 2023, the emerging Asia and advanced Asia contribution to global protection gaps has gone from 40% to now 50% of the protection gaps are in Asia itself. So what are the problems? Why is it not working? We did study a lot of material about what the media was saying, what the resources in public discourse were saying. And most of that was really about people talking amongst themselves. The insurance industry is talking about protection gaps to the insurance industry. The public sector is talking about protection gaps to the public sector. There's not an interaction between each other. And that's why this diagram that I put there is important. It's kind of like we're having two separate meetings, but we've got this cone of silence between each other. So we have to get this interaction working much more quickly, much more sooner in the process, and to be talking to each other in language that we understand. We looked at the solutions that had been applied. We saw the three solutions in the last chart. In fact, in Asia, we found all of those solutions, and we found all of them actually working quite well. So the fact is, we can do it. The question is, we're just not doing enough. We're doing too small, too little, too siloed little projects. We need to expand this to make it work. That's why we're not making the progress we need to make. And key to that is motivating a broader group across government. So just getting the insurance regulatory people or the Ministry of Finance engaged is one thing, but we really have to get engaged across the whole sectors of government, because ministries of agriculture, ministries of finance, ministries of social security, everybody has a role to play to make this happen. So how do we empower the frontline government agencies such as insurance and finance to be able to engage with the other agencies such as health, agriculture and such. And so we've done some work on that front. And an additional thing that we're concerned about is the lack of data at country by country level. There's quite a lot of data I showed you about, what's happening across Asia, but if you pick one individual country within the ASEAN +3 group and say, what's the situation for us? That information isn't publicly available. And we really have to be building up that so that we can empower the authorities in those countries to be able to stand in front of their minister and say, this is our problem, not this is the Asian problem, and this is what we need to do. And finally, with respect to cost-benefit analysis, that's been a big issue. What usually happens is that projects get proposed, and then the evidence is that if you have a project and you do a cost-benefit analysis, the costs and the benefits will justify the project. The only problem is that we're not actually using the cost-benefit analysis to choose which projects we really should be focusing on, the ones with the greatest benefit compared to the cost. And so we need to use cost benefit to choose our projects more rather than just to justify the projects that we've already chosen. So now what we're arguing is we should take a more holistic approach, and therefore we need to get the other government agencies involved. To do that, we have developed a whole lot of approaches for justifying this for particular agencies about what is of concern to them. So if you look, for example, at the Sustainable Development Goals from the United Nations, we have identified that all of those are relevant in particular. We're talking about climate change today, so we can actually say how important it is that there are particular targets for the people who are climate focused in terms of their policy work that are important. And if reducing protection gaps is going to help their target, then they should become more interested in working with us to reduce those gaps to better improve the resilience of society. And we have those for each of the Sustainable Development Goals. We also have a sort of economic argument, and this is interesting in an earthquake that occurred between and Christchurch and Haiti at the same time. And we mapped the Japanese earthquake over this a year later. But this was the GDP impact in Haiti. So you can see a really sharp decline in 2010 when they had the earthquake. The earthquake was virtually the same in terms of magnitude, proximity to the population centre, things like that in New Zealand, and this was their result. So they had a much better GDP impact. Now, when you have this and you see the Japanese one was somewhere in the middle, maybe we don't necessarily want the New Zealand one where GDP actually increased because of the earthquake, but that was because they actually had immediate funding flowing through to people. They could get back on their feet very quickly, and the funding for the reconstruction was right there very quickly. So it was actually a boost to the economy. Another one that we've provided you with all of the information for all of these, but in the interest of time, I'm just going to jump through to one other one, which is how we think that the risks interrelate with each other and how important it is to get the different solutions to relate to each other very quickly as well. And this is where these three groups, increasing insurance penetration, the fiscal risk response, and the risk reduction interrelate. So we can see, for example, in this chart, that if you can reduce the risk, then that reduces the burden on the government for its fiscal risk. If the government burden on fiscal risk can be enhanced, that can be improved by increasing insurance penetration as well. But also, if you have a risk reduction, that can help to improve insurance penetration. Now, how that happens is I have a serious risk that's preventing insurers from insuring those people. If we can address that risk and reduce it, insurers can come in and enhance the insurance for those people for their other risks, and therefore reduce the exposure of the government. So we can see it works a bit like this. Normally, from the public sector point of view, you might look at an investment and say, okay, we can invest in this risk reduction. We're going to get our fiscal savings and such, and that will improve the resilience overall and lower the burden on the fiscal budget. But what we're saying is, if you can insert the insurance process in the middle of this, the process of insurance where they put a price on risk, where the underwriting process takes place, where claims are paid, where investment processes work effectively, that has the result of incentivizing risk reduction behavior further. So instead of the government just investing in risk reduction, now the insurance sector can come in on top of that and incentivize the policyholders, the new policyholders, to reduce their risk. It can improve affordability and availability of insurance, and these public-private partnerships can reduce the burden on the government fiscally. This creates an additional virtual cycle, really, that can then be elevated into further solutions. And that way, these solutions can be expanded on both sides. So, finally, we have a paper coming out about how to make all of this happen, not just to discuss these issues, but how to make it happen. And we're really focusing on an iterative process, a consultative and collaborative process, and a very holistic process of getting as many people involved as possible, as early as possible, to work together and to provide the motivation for how you can encourage them to work with you. First step is to really understand and quantify these key risks. And then after that, to say, let's identify the partners we need, the target groups we're trying to focus on, and the stakeholders outside of government that we need to get involved. Develop our solutions, get as broad a solution menu as we can, consult and engage on what benefits we're going to get from each of these solutions, and then prioritize them, as I said, based on the cost benefit, not on any other criteria. And that way we should be able to make progress on reducing the protection gap rather than alternative solutions. And then finally, we've got some suggestions in the paper about implementing the plan and engaging with additional stakeholders and partners to make sure it can really work. So together, I think all of these are really useful. There's a lot more information in the handout that we're providing to you, but thank you very much for the discussion so far, and look forward to your questions.
Thank you very much, Craig, for your presentation and for stressing the importance of collaboration in addressing the protection gaps. We have about 40 minutes left, and I would like to invite the audience to post their questions to the speakers. But before we move on to the Q&A stage, I would like to invite our speakers to reflect on one another's presentation. So let's start with Olivia's presentation. Ellen, can you comment on Olivia's presentation? Are public perceptions of preparedness aligned with the region's actual financial and disaster response capabilities? And then for Craig, I'd like to hear from you as well. What role does perception versus actual financial capacity play in effective disaster planning? I'd like to give both of you 2 minutes each to respond before I pass the floor to Ellen. Olivia, would you like to go first?
Sorry, I thought I was going to get some feedback from Ellen and Craig there. Which question would you like me to tackle first?
Sorry. Yes, Ellen, would you like to go first? My apologies.
Hi, yes, yeah, definitely. Yeah, thank you again for Dr. Jensen's presentation. Yeah, my reflection actually is, I think it comes as no, I mean, it is a line that, countries such as Philippines would be prepared because after all, they are the world's, the most hazardous country according to the World Risk Report. So, I mean, rightfully, they ought to be aware and to be prepared for disaster which pass through their country very frequently. But I think in terms of how well one can be prepared, things always can catch them by surprise. So there are always room for improvement in that sense. I think also to reflect also on Dr. Jensen's, I think one of the beginning slide on the climate change awareness, it is kind of counterintuitive that Southeast Asian, they are on the bottom of the list of countries being aware of the perceived threat of climate change. And sort of it gets me wonder whether is it because, I mean, climate change is a very slow occurring phenomenon. And, Southeast Asia has always, been threatened by severe weather. And so, if you're always under threat, you don't actually see it becoming worse slowly, whereas other region might be the case of hasn't been much exposure before, and then now they have that exposure to disaster. I wonder whether that could be one of the rationale. So actually, I would like Dr. Jensen view on that to see whether there's any further insight from the data. And also the other interesting point from the presentation, I think, is the point on how community involvement actually makes people, I mean, if I understood it correctly, it makes people more prepared, leading to individual action. And I wonder whether that is also to do with risk awareness, because, I mean, indirectly, if you see your neighbor being prepared, for the upcoming hurricane season, it might prompt you to do some preparing yourself. So that is also a very interesting narrative, because I think if we can, there is that the crowding effect, where if you can get sufficient people to be prepared, you might encourage, even more preparedness before the disaster. And then lastly, so I just want to comment because I'm a Singaporean. So I think the part about the East Coast construction, the survey about how much people are willing to pay for it. I think that is actually, it's quite amusing, because that is actually like super prime land in Singapore context. So I sure hope people are willing to pay a lot more for, flood defense in that area because it's so near the, central business district. And then I'll stop my waffling and thank you for the presentation.
Thank you very much. Craig, would you like to say something as well before I hand over to Olivia?
Yes, Olivia, thank you very much for a really interesting presentation, and I think it sort of interrelates to some of the things that we've been finding so well. So we've just talked there about the role of risk mitigation, and one of those things like public education, for example, is one of those, and awareness. What people are actually thinking makes an enormous difference of just to understand how well public education programs are going to work. And so I think this research is really critical to knowing how effective we can implement some of these solutions. The attitudes of people to taking out insurance is also critical. That's our second solution stream. How people, what impediments they might see, what value they perceive for the insurance, what problems they understand, whether they perceive these risks as being higher or lower priority. I mean, people rank risks in their own mind differently to how scientific risk people would do so, and just understanding those differences is really, really fundamental to being able to harness the capacity of change. And I think, from what we've seen, we need to be able to make change more effective. And key to that is really understanding what drives the motivations of people, both on the mitigation front and on the solution front. But then I think you also touched on the interest that people have in supporting governments to fund some of their own contributions, to what extent they expect the government to step up. And that's really helpful to motivate governments to say, well, look, the population is expecting you to step up in this area, but they're prepared to make their contribution in these other areas. So I think it's really fundamental to help policymakers to balance those three solutions that we're talking about.
Thank you very much, Craig. Olivia, would you like to respond?
Sure. Thank you all very much for those interesting comments. Let me turn to a couple of Ellen's comments first. One about climate change risk perceptions. And I think you may be onto something, Ellen, that the natural hazards and experience of disasters relating to natural hazards are, I guess, more likely to drive risk perceptions in a place which doesn't, or which has less experience of natural hazards, right? You would expect the impact to be stronger where people haven't experienced them before, and maybe not so profound in places where people have been experiencing these sort of regularly in recent times. But a question for me is, how much does it matter? Do we need people to perceive climate change risks, especially the physical risks around climate change, to be high? And I think what some of the other work that we've been done and that is about the risk. And so that brings me onto your second comment, and you had noted the results that we found about sort of community involvement and social norms. So looking at what your neighbor does and copying that. And so we find, and other studies have found similarly, that it's this your perceptions, your feelings, so your affective response to the action, and crucially, how effective you think those actions are in changing something for you, more than the perception of the risk that drives people's actions. So I would say when we're looking to the intervention side, the research results are pointing us towards more of a focus on communicating to people about what they can do, overcoming the constraints to doing so, and how it's going to be effective for them. And certainly, as you pointed out, Ellen, telling them what their neighbors are doing if they're not aware, and using that as a way to encourage people to adopt sort of protective actions. So Craig, thank you very much for highlighting the importance of understanding the effectiveness of our interventions to change things, especially if we're going to use interventions around information or education or communication campaigns. And in general, these kinds of interventions are much less well researched. So the quality of the studies that we do on these kinds of interventions is usually much more cursory, if it happens at all, than it is for other types of policies. And one of the things that our institute very much wants to do and wants to encourage others to do more is to treat those kinds of information and communication policies or interventions to the same kind of rigorous evaluation that we apply to other policies. So we suspect, and we have sort of anecdotal evidence, case studies, that they do make a difference. But we need to be able to show that. And then we hope to encourage everybody to design those interventions using piloting, testing, evaluation metrics in a way that can then make them more effective in the future. Thanks.
Thank you very much. In the interest of time, let's move on to Ellen's presentation. Olivia, let's start with you. Ellen spoke about regional risk finance solutions. In your view, how do we balance national strategies with regional collaboration to improve disaster resilience? And then
I think Ellen highlighted some of the most important things. One of those was about having a common evidence base, setting in place the sort of structures and the institutions that are needed in order for governments to collect data and then to be willing to share that data, and then to have a common set of indicators, of standards with which data are collected, presented, and analyzed in order to have a shared understanding of what the risks are. Without that, you can see that relationship of trust, of willingness to engage in a common activity is then very hard to establish. And of course, when Ellen talked about trust in one of her slides, my ears perked up. And I thought, this is something that we find at the individual level, which is very important. And here it is playing out as being important between governments too. And I wonder whether there aren't several layers here, one being trust between different government agencies and departments, and then between governments with each other. And perhaps the differences in language and the absence of a common language is something that also holds that back. So I think there was a little echo with something from one of the points that Craig made there. So we often talk about building trust, and one way to sort of turn that around is to think, well, what could we do to be more trustworthy? So I wonder whether in the sorts of discussions that Ellen, maybe you have the opportunity to have with governments, with government agencies, for them not just to think about, what would it take for institutionally for us to have trust in others, but also to think about what are the actions that each government could take to be more trustworthy in the eyes of their counterparts, and as well, I think, also of the public. So many interesting issues, and I look forward to hearing any more comments that Ellen's allowed to have time for. Thanks.
Ellen, I'll let you comment on what Olivia said before I move on to let Craig comment on your presentation. But please keep it short. Thank you.
Thanks, Dr. Jensen. I think indeed you catch on to one of the biggest challenge in regional collaboration, because I think the trust between governments is definitely is something that has to be worked on, especially when we talk about regional collaboration. If you think about regional pooling of risk, and then how do you price risk, right? In the first place, pricing risk for one country is difficult enough. There are different models telling you different figures. And when governments think about, sharing risk with another government, how can they trust an institution, even one that they owned, regionally, to price their risk correctly and, to ensure the fairness in contribution among governments? So I think indeed that is an area that we are working on. But Also, I think the technology has definitely improved significantly. I think that there's still a lot of work to be done. I think Craig from GAIP will know very well that, the data platform and things for gathering data. If we can have a, regional standards in gathering data at the first instance, and then, the hazard models, they will gradually improve with, more evidence and more scientific research, then I think the government will slowly, very slowly increase their trust that, a regional pool can deliver fair pricing to all the member countries. But also, I think, if there could be other mechanisms such as an independent review by external experts, transparency in a communication that's very important, and general just a capacity building for governments. Then I think slowly that trust in a regional collaboration could be realized.
Thank you very much. Next question is for Craig. What do you think of Ellen's presentation? How can different stakeholders such as regional risk pools like CDRIF, public-private partnerships like the Global Asia Insurance Partnerships, and academia and think tank policies like ISEAS collaborate more effectively to drive meaningful impact?
Well, I think, some of the highlighted points that Ellen made, we are tremendously supportive of, and we have a voice through to the policy arms of government, which reinforce the points that Ellen's making. And I think Ellen's making them directly, and it's useful for us to make them as well because we think they're important. What Ellen didn't really say, and probably because she's too shy to say so, is that when she showed the slide of the 4 different regional risk pools, CDRIF is the newcomer to the party, and so the other risk pools provide some sort of indication of what can be achieved as CDRIF grows, and they're all very positive stories, but things need to be done to make sure that can happen, including the commitment of governments in the region to support risk pooling through the CDRIF pool. There's also some of the impediments that CDRIF was talking about, legislative impediments in individual countries. We think those ones can be addressed, and it just is a matter of governments making the decision to do so. And that would make Ellen's life a lot easier, I'm sure, but also, it is important to capture the very material financial benefits that can be offered. So overall, we think that particularly in terms of our middle solution group, CDRIF is really an important opportunity for the region. I think also when we were talking about the other things that GAIP is doing, particularly the talent development and things like that, the capacity development, the development of experience and solutions, and the development of data and understanding, these are all areas where I think there's great opportunities for collaboration, but also things which are important that we're all doing, and we need to work together to leverage those opportunities to make them magnified across the region. One of the things that I learned when I was working for the World Bank was that it was quite straightforward to go to Latin America. Everyone spoke Spanish. They had the same legal system, things like that. It's quite relatively straightforward to go to Africa, where there was essentially 2 colonial legal systems. But when you go to Asia, everything is different. It's very, very diverse. And most people outside of those of us who work in the region don't understand that. But we need to work together to bring that diversity to our benefit, to make sure we're not putting barriers in front of ourselves at the same time as maximising our collaboration. And that's really, I think, the most important thing. So the more collaboration we can do, the better, to bring forward that, because it's probably easier to collaborate if we take the very first example of the CDRIF version in the Caribbean. All those countries were English colonies. All those countries spoke the same language. They had the same legal system. They had the same everything else. It's not so easy in Asia, and we have to recognise our diversity and maximise our opportunities at the same time.
Thank you, Craig. Ellen, would you like to respond?
Thank you, Craig, again for recognizing another very big challenge of sea drift is I think the diversity, I think in ASEAN is definitely way wider than what the other risk pool has gone through. So I think the sort of the game that we are playing here is very different from what the other risk pool has gone through. And also want to reflect a bit on from sea drift perspective. I think it's very useful, for think tanks like GAIP, to conduct this independent the research into protection gap, or also Dr. Jensen's study into where, guidance for government where they can invest their money in. Because I think the truth is that the risk of disaster risk is not something that we see every day. But by crystallizing, the research, the survey, or the insights on the paper, at least it is one more thing that we can show the government, another voice telling them that they should be investing in resilience and being prepared. Because I think that the example on Haiti and New Zealand couldn't be discussed enough, because the fact is that if countries are prepared before the disaster, it is the fact that they recover much more easily than if they do not have any liquidity after the disaster, because then it just gets exponentially worse. So I definitely appreciate the work from the other two institutions on that front.
Actually, Ellen, there's a question from the floor. Normally, I keep this to the Q&A segment, but I think this is quite relevant to what we've just been touching on. So there's a question from Dante Portula. Dante was asking, does Sea Drift work with the private insurance industry? Kindly tell us about Sea Drift's experience working in the Philippines with private insurers, including nature-based insurance solutions.
Sure, thank you for that question. So the original mandate of Sea Drift, obviously as a government-owned insurance company, our key mandate is to look after the sovereign risk. Although currently we are in discussion on with our member countries on expanding the eligible policy holders. So we do not reinsure private company in that sense. We are not mandated to compete in the commercial market or to replace a private company or to disrupt domestic market. But rather the role of Sea Drift is to fill in market gaps or overcome market failures for which there is no capacity. As nicely outlined in one of our Craig's presentation, there is an insurable gap for which private capacity is not available. In this sense, this is the sort of market failure that Sea Drift was established for, because then as a not-for-profit company, we could come in and then make the case or the analysis or to set up the structure for a risk transfer transaction to happen. Because some of these transactions, they take months or years to materialize, and most of the time, private insurance company, they do not have the appetite for such long transaction to happen. And in the Philippines, our counterparts are mainly with the governments and its agencies. So that will be GSIS, which is the state-owned insurance company. So I mean, it's a long way of saying that we do not transact with the private insurance company. But on the other hand, when we do receive sovereign risk, we do work with the commercial reinsurers to pass through some of this risk, because Sea Drift as a small company, we do not have the capital to fully retain all the risk that comes to us.
Thank you very much. I'm mindful of the time, so I think it's good to move on to Craig's presentation about protection gaps. Ellen, I would like you to go first. Keeping Craig's presentation in mind, what role do regional risk pools like your organization play in supporting regional resilience?
Yeah, thank you, Dr. Le. So yeah, as what I mentioned earlier, I think one of the Sea Drift mandate is to try to close the insurable gap where private capacity is not available. That is a very key focus for us. And I think in addition to that, I think by pooling risk in a region and hopefully realizing that premium savings through the diversification effect, that we can lower cost of insurance and increase penetration, which is one of another key point in Craig's presentation on how to reduce that protection gap. And also, as mentioned, I think that Haiti versus New Zealand example is another key argument for why immediate funding is very critical. And this is where CDRIF do offer parametric products, which give very quick liquidity to government. As I mentioned, our payout to Laos was well within contractual period, which we normally set as 10 working days. But in those instances, we are able to pay out much faster than that to offer relief to the government. And I think finally, because as an insurance company, we put a price on risk, and every risk that we carry, there is a premium to be paid. So in that sense, we hope that through the pricing of risk, whether it's through the use of hazard map or through knowing where the biggest risks are in the country's exposure, that we indirectly help to reduce the risk that the company face, because it forces them into this cost-benefit analysis. Do you want to use the money to pay for the insurance premium and wait for the disaster to happen, or do you want to invest in some resilient infrastructure project upfront? So I think those are the key points I will make.
Thank you. Now I move on to Olivia. Can you share your thoughts on Craig's presentation? Specifically, how do we prioritize capacity building to ensure that different levels of government can carry out effective resilience efforts, especially in addressing challenges faced by the most vulnerable members of society?
It's a huge question. And I wonder to what extent we need to prioritize. Maybe we could increase the resources that are devoted to that sort of across the board, rather than trying to put the focus on identifying the most vulnerable and sort of defining and identifying them, to think about actions at all levels that might help to decrease vulnerability. And there may still be segments of the population or particular regions or locations which face high risks and for some reason have a particularly large, let's say, protection gap that we could then sort of identify and focus on. But it may be that there almost certainly are things that need to be done, across the board and at all levels. I think one of the things that Craig talked about was the need for a common language. And also emphasizing the use of cost benefit or analysis, sort of rigorous analysis to compare and to use those to prioritize, not simply to decide whether a project should go ahead or not. And I think that points us to pay more attention to the level at which different types of interventions are assessed, whether it's within a ministry or a government department, or within a local government, or within the office of a government department. And often I think that we're applying these methodologies and perhaps conducting those assessments at too micro a scale, rather than being able to, and that prevents us from being able to find complementarities at higher levels and across the board. Governments don't do whole of Singapore, perhaps a bit of an exception, but governments tend not to do whole of government risk assessments and whole of government identification of most cost-effective protective actions. Ideally, I think we would move in that direction. I like to think of myself as being a realistic optimist. So I kind of homed in on the bit of Craig's presentation, which was about virtuous cycles. And I thought that the idea of and the hope that, for example, governments taking risk reduction actions like investments in sort of protective infrastructure might allow the private sector to enter into markets that they're not in at the moment, or to expand their presence in markets that they're not in at the moment. And I wanted to take this opportunity to ask to hear more about that, and whether there are sort of any examples. But it seems to me, just like your Haiti and Christchurch story, that that's another story that really needs to get told over and over again. Thanks.
Craig, would you like to respond? Your mic is off. Can you turn on your mic, please?
Yes. Okay. Much better. I'm glad for the support for our cause. Yes. And I think that what we're really advocating is this holistic approach from the beginning, and to try and make sure that people start talking to each other from the beginning. We want, for example, the government to say, if we do this mitigation exercise, we want the insurance industry to say, okay, now we can do this if you do that. If you do this other one, we can do that. And almost to sign up as a genuine partnership commitment, instead of saying, well, we're very supportive and just leave it at that. You know, we actually need people to get engaged with that. And on the cost benefit side, I mean, I think we're going beyond the cost benefit of, if we do this, we can reduce the risk this way, but also what other benefits are we going to get from this? So, for example, and the Philippines this would be relevant for, but other countries maybe not, but necessarily typhoons. Typhoons are affected by the coastal landscape that they impact when they come on shore. So environmental restoration of coastal areas is important to reduce risk of typhoon damage further inland. It's easier to build a levee bank, but the environmental restoration can do a tremendous amount for fisheries activity, ecotourism, whatever else, even when there's no typhoon. So a lot of economic benefit can take place outside the catastrophic event itself. And we need to be able to bring those all in together. So this much more holistic approach is really fundamental, and I think is a great way to leverage capacity. So if we can start saying to governments, if you can spend $100 and get $500 benefit, that's much more effective than spending $100 and getting $120 benefit. And that, at the end of the day, ministries of finance are motivated by that sort of thing. If we can say to ministries of agriculture, if we can do this, you can get this kind of benefit in terms of your agricultural productivity. That's important. So that's why we spent so much time talking about motivations within government to try and get a much bigger group of government together to come to the table to make this happen, and to encourage them to get the insurance industry involved early, and the insurance industry to participate in that as well in a very proactive and positive way.
Thank you very much. So now we come to the Q&A session, and we now open the floor to questions by the audience. And actually, the first question I'm going to flag is for Craig again. So if you refer to your slide number 12, there's a question with regards to that. You might want to flash it again. The person is asking, Mr. Jason Fernandez is asking, can you elaborate a little bit more on the slide on leveraging the interaction between the solution types?
Yes, so this is the kind of example we're talking about, which we mentioned just in the last discussion. If we have a situation where insurance is very difficult to secure for a particular person, that's problematic. The insurance industry might say, we can't insure that person. The government might say, well, look, we're going to do this mitigation activity. We don't want them to say, we're going to do this mitigation activity and solve that person's problem fully, because that's not what they're aiming to do. What we want them to say is, we're going to do this mitigation activity, address this risk that we're most concerned about from government's point of view. But by the way, you can then step in and do more for that person. Now, just to choose one recent example, but there are plenty of them around the world, where natural catastrophes are causing insurance companies to want to step away from insuring people. And this is a big concern. It's a big concern for a lot of reasons, but one of those reasons is, for example, if you want to buy a house and the bank says you need to insure your house because we're going to give you a mortgage, if you can't insure it because you're in a high peril area, that's problematic. If a government partnership can step in and say, we're going to deal with the natural peril problem, and the insurance industry can still insure the rest. For example, if your kitchen catches fire, or ordinary things that happen at home, then you can still get insurance because they're dealing with the extreme risk, just taking it away, and still the rest of the insurance industry is able to be there instead of them walking away altogether. That means you still have access to finance, you still have access to the economic opportunities that presents, rather than having those eroded. So all of these things are really important to be able to get it to come together. The pricing mechanism is another one. If I have a policy that says, if you do this sort of risk behavior, you're going to be charged this premium, but if you adopt this mechanism of reducing your risk, I'm going to charge you less. People are going to invest themselves in this. Instead of governments having to pay for it, people are going to improve the quality of their building and their windows and whatever else it might be to be better protected from natural catastrophes and more resilient. And when they're more resilient, they need less social protection in the event of adversity and are able to cope better. And even when it comes to taking out the individual policy, the insurance underwriter might say, we need locks on those windows, we need this fire escape here, whatever it might be. They're encouraging customers to improve their risk profile, and customers are investing in that if they are able to get onto the, let's call it the insurance ladder. And so all of those things make a difference. And then finally, the claims process. If insurance claims can pay something quickly to the person, a small amount of money right at the start makes a tremendous difference to how resilient those people are going to be in the face of disaster. They don't need the whole thing fixed in the first week, but they need something straight away to be able to keep going. And the sooner people can get something, the better. The sooner insurance companies can pay something better. That's why Ellen's parametric quick payment is so important to so many vulnerable people. We don't have to solve all their problems on the first week, but if we can get something for them, that can reduce the impact of the disaster tremendously. So these are all the critical things where how the insurance process, so long as we can connect it in, can make a big difference, and government doesn't have to pay for it. It's basically free.
Okay, we are running out of time, but let me extend this session by a little. I'm going to take a question from the floor by Katie Yip. Katie Yip is asking, I think this question is addressed to Ellen. I noticed that other risk pools are in a form of segregated cells. Does Seadrift have similar legal structures that segregates different perils and country risks? How does it work? Ellen?
Thank you, Katie, for that question. It's actually a very highly legal questions that will put everybody else to sleep, but I will make an attempt at making a very quick
Less
answer.
than 1 minute, yes, thank you.
So Seadrift, we do not currently have, first of all, we do not have enough demand for the country. We're not big enough to have segregated cells. That is step number one, that we first need to work on getting the demand. And second of all, the legal structure in Singapore actually is something that we're exploring with MAS on having this segregated cell structure, but it's not something that is available for insurance company at the minute. But basically how it works is that you have separate cells where the capital and the assets are kept separate, so that if one of the product, due to an extreme event were to sort of the assets is to be depleted, it would not affect the assets of other cells. I think that's the 1 minute answer. Apologies if that's as clear as mud. But we can, please feel free to email me if you have an additional question on that front.
Okay. As we near the end of this session, I'd like to pose one final question to all our speakers, a question that cuts to the heart of today's discussion. So the question is, if there's one concrete action that could make the biggest difference in bridging the protection gap and building financial resilience against climate disasters in the ASEAN region, what would it be? And what would it take to achieve it? So let's think big, but stay grounded in actionable solutions. I will let Olivia go first, followed by Craig, followed by Alan.
Despite having talked a lot about perceptions, understanding, and so on, I think the big step and the one that creates the most action most effectively is clear regulation. And I think it comes at the national level. And while we might also want to encourage cooperation and collaboration between all sorts of partners at lots of different levels, that having a regulatory framework that clearly, say, commits governments to taking certain actions while setting a very clear framework within which the private sector, in this case the insurance sector, operates, is the thing that would make the biggest difference most quickly.
Craig, would you like to go next?
Well, I think what we're advocating really is something similar, really getting the whole of government together to create that sense of urgency and action at the whole of government level rather than just one individual agency or another. And at the same time, also really encouraging early engagement with the insurance industry and other stakeholders rather than waiting till you've sorted out the solutions. But so that's the twofold story. Get as much of government involved as possible, create that holistic demand and need for a solution, and then bring the rest of the people along collaboratively.
Thank you. Alan?
Yeah, I mean, the one word is, well, two words actually is awareness and acceptance, right? Being aware of the risk and accepting that risk is something that is tangible and will stay with us. So it has to be managed. I think the risk awareness have to be increased.
Thank you, Alan, for your very concise answer. So I'm going to close this session now. Thank you, Olivia, Alan, and Craig, for your invaluable insights. To our audience, thank you. Your participation today is instrumental in laying the groundwork for a climate-resilient ASEAN. I would also like to extend my gratitude to my ISEAS colleagues who dedicated efforts behind the scenes to make today's event possible. Finally, a special thanks to our partners at the Global Asia Insurance Partnership. This conversation is just beginning. I hope we can continue to collaborate to turn insights into action. I'll now hand the floor back to our MC. Jiahui, please.
Thank you to all the panelists for a wonderful session, and thank you to the audience for your kind support and your active participation. If you would like to be kept informed on activities and events by ISEAS and GAIP, please sign up for updates at the links which I have just pasted in the chat box. And if you had some trouble with our newsletter link earlier, I have now added an alternative link in the chat, which should work this time. So thank you so much, and we look forward to seeing you at our next webinar. Have a great day ahead.